All right, welcome back to another episode of the Jon Gil Podcast Show, and we want to thank our partner, as always, Element Studios. That's EL3MENT Studios. Go ahead and check them out. They do great corporate headshots and real estate photography. Today, we are excited to talk about the importance of building your credit and maintaining a good, solid credit, okay? But before we begin, also, I want you to check out, if you're a business owner or a self-employed entrepreneur, check out the SBA website. Right now, they are giving these grants, forgivable loans. Go to COVID-19 relief.sba.gov. It's a very streamlined process. It'll only take you about 2 hours approximately to complete. At the very most, it took me about 10 minutes. So it really shouldn't take that long. And that is the SBA's Economic Injury Disaster Loan Program. And to be qualified, essentially, again, you just have to have been impacted by what's going on at the moment. And check that out, COVID-19 relief.sba.gov. Super simple. This actually ties into the conversation of having good credit, because a lot of the way that I see that they are approving you is really on just your income and credit, and that's really how most lenders will typically approve you for any sort of credit, right? There's 3 national credit consumer reporting agencies out there in the U.S., and that is Equifax, TransUnion, and Experian, and they will gather all of your payment history and come up with a credit score that will determine essentially your ability to repay a loan, okay? And one of the best ways to maintain a good credit score, there's actually several steps that you want to follow. The first is, obviously, you want to pay your bills on time, right? It seems so simple. I think that's something that just seems basic, but a lot of people have a very hard time understanding just how important it is to just pay your bills on time. Now, essentially, most creditors, you don't have to pay on the first, there's some leeway. If you pay after 30 days, I know that on a mortgage, then they will report that to the credit bureaus. So just make sure that you're paying that before the 15th usually, and then you won't get hit with that late fee. I know that every different creditor is different, but just follow those steps. Very simple. If you're lending out to someone, you would want them to pay you back as soon as possible. So it's just an easy step to live by, right? So rule number 1, just pay your bills on time. Makes common sense. Number 2, you want to keep your credit card balances low. So one of the biggest problems that I see is that most people will take out a credit card. They're going to max it out. Don't do that. You want to maintain your balance at least less than half of what they're giving you. Okay, I actually recommend just spending a third of the amount that they're allowing you. So just about 30%. If you got, $1,000 credit line, don't spend over that 333. Let's just say $300, okay? Don't spend over that. And if you do, you want to try to pay that back within the month. So it's just another way to help build your credit quickly. So say you're just, you're going to apply for a new home or a car, and you're wanting to ensure that you can have that high credit rating, then a nice trick is, just pay down that balance as quickly as possible, and even within the month, so there's activity going on the account that you have open, but you're maintaining that low balance. Don't close any of your old credit cards. That's another thing. Number 3, do not close your credit cards. Just because, let's say you have a 0 balance on one, do not close it out. If you don't want to use it, that's great. Take your credit card, cut it, and that should be fine. But just do not close it out, because what happens is essentially they're looking at a ratio of total credit line available versus used, right? And they'll lump it together and determine whether or not you have maintained a total low balance on all of your debts, okay? And super important, too, are your credit inquiries. I think this is number 4. You want to make sure that you are not applying back to back to back. There's a difference between a hard pull and a soft pull. Hard credit inquiry is essentially, that the agency that you are at, say wherever it is that you're applying for credit, they are going to pull from TransUnion, Equifax, and Experian all of your credit history, and that significantly lowers and drops your credit rating, okay? So you want to make sure that you're not pulling a lot of scores at the same time. And that happens when you're out shopping for different credit cards or for cars, I get it. But if you want to maintain that good report, just see if you can have a copy of that credit report. So when you go to a different vendor or a lender, let's say, you have that in your hand and you can say, look, this is what I have. And then the other one that doesn't hurt your credit score is called a soft pool. And that's just an abstract of your credit, and it won't pull down, or it won't give you that derogatory negative impact on your credit rating. Okay. And last but not least, you just want to continue to watch your credit. Okay. One of the best ones that I use is I just go through mint.com, honestly, and mint.com is probably one of the best websites because it will also track all of your debts. All right, so you can put on all of your credit cards on there in one account. You can put your bank accounts, and there is a section on mint.com labeled credit report, and it will tell you exactly what your credit score is every month, and it will also tell you what you're doing right, what you're doing wrong. So, on mine it says you're on time payments, excellent, 100%. So that just, essentially means what it means. Your credit usage, it says stay below 30% credit usage. Okay. Again, that one also looks good. And the average age of your credit is also very important. Okay. And I missed that part earlier, which is you want to try to keep those those credit cards open as long as possible. And that will also help improve your credit scores. So why is it so important, again, to just maintain a good credit score? Is essentially it is the only way that a lender will be able to determine the risk of the borrower. Okay, if you've got low credit, essentially you're a higher risk, and with that comes higher with that comes higher interest rates when you're applying for a loan. That also means that you might get denied for housing if you're going out looking for an apartment building, and you keep getting denied, but you say, "Hey, I make great income." Well, at the end of the day, if your credit sucks, I'm sorry to tell you, that's why you've been denied, is because you're showing through your past history that you are not a person that this borrower or this lender can rely on to making timely payments. Okay, I don't think that you would want to lend to somebody that doesn't make their payments on time, right? Actually, I even recommend for business owners to check out their partner's credit rating as well. You don't want to have a partner that has bad credit, because again, at the end of the day, you know what? That's also going to probably dictate a lot of future problems. Okay, when you're going out getting loans, SBA loans or whatever things that you have to pay back. Okay, now I understand that everyone's situation is different, and you can come out of a bad credit rating, and things happen, right? Life happens. I personally had a situation with a short sale. I had a 760 credit score prior to the short sale. After the short sale, my credit score dropped to like 500. It was crazy, and it was insane. But right now, I'm back up to about a 740, and essentially that just shows that you can increase your credit score after time. Now, my issue was the short sale wouldn't go away for about, 6 years. I think it was like 4 to 6 years. Can't recall exactly how long that was, but after a certain amount of time, that's another great point, you can actually remove certain debts that show up on your credit report, and you call up each bureau, and you just tell them, look, this was 3, 4, 5 years ago. Can we get this removed off of my credit report? Okay. And I also understand, again, I'm not trying to dog on anybody who has bad credit. There are things that happen in life, like what happened in the 2008 recession, where everybody got caught and had to do those short sales, or medical issues. And one thing that I've noticed consistently is the hospitals are terrible at showing whether or not you've made the payments. Okay. And sometimes the insurance doesn't pick up the tab. So I've seen a lot of that come up, and which is why actually on the leasing side, we do excuse when there's an issue directly affecting hospital bills, because the hospitals are just a mess. You'd think that they would get their act together with the amount of money that they make, but anyway, we're the ones that end up getting hit with that. It hasn't happened to me. It has not happened to me yet, but I've seen that on a lot of different applicants, okay? So, again, just maintain that great credit score because that's going to open a lot of doors for you, especially on when you have the higher credit score. You're going to have some of the best interest rates. Doors will open for you. Opportunities will open. And that is essentially what I wanted to talk to you guys about today. Just please maintain that active, proper credit score. And if you need help on any more on ways to just improve it, reach out to me directly. I'll be more than happy to assist you. Thanks again so much for tuning in. If you like what you heard, hit that like button. Please hit that subscribe button. And thank you so much.